up? What's going on, everybody? Johnny here, the military CEO, and today we are reacting to a couple videos. But first, I wanted to start off with, of course, the big, beautiful bill and the impact to real estate investors. Like, one of the big things that you have to focus on is what's going on with the economy, what's happening with legislation, and what does that mean to your bottom line? How does that impact your real estate investing strategy? And so we're gonna look at one of the videos that I always follow. This individual, the CPA uh, of choice, that and kind of get his take on going through what's going on in this big beautiful bill and what does it mean to us as real estate investors. So with that, let's get going.
Affecting most, and a few that we don't see any changes. At the end, I'm going to give you a link where you can see a full summary related to this. So, JJ the CPA here, hope you're doing well. Here's the big one, at least for small business owners, is that the QBI deduction remains at 20% and in effect after this year. You may not be aware of this, but this is a beautiful, out of thin air tax deduction, meaning the net income of your business times 20% is a deduction out of thin air. And it
Yeah, that's one of the big ones. Like, 20% just gone like that. Yeah, as a business owner, you don't have to worry about with the QBI. So that got continued going forward in the bill, which is huge for business owners in being able to offset where 20% of your gross income that you bring in isn't susceptible to taxes. And that's one of the things that I always harp on is like you have to find a way to be an investor or a business owner in order to win in capitalism, to win in the United States and where we are right now. So QBI is a huge one that's pro business. So we'll say, hey, that's definitely one for the business owners in the books right there with the QBI.
continues. With that being said, of course, there's always exceptions to that and phase outs. Also, no tax on tips. But where this is landing is that it'll be up to $25,000 of tips. And they did define which industries will be able to benefit from this. And of course, there are phase out. No tax on overtime up to $12,500. The same. Any tax law is going to have exceptions and phase outs. Additional senior deduction. I'm about getting there myself, but
Yeah, so looking at the real quickly on the no tax on tips, of course, that doesn't really apply to us as real estate investors. Looking at the no tax on overtime, maybe, if you're working for a brokerage or something, doing outside of just real estate investing, maybe in your W-2 job, you're impacted there. But not a big one there that's going to impact the bottom line for us as real estate investors. Let's keep going and see what's coming up next we
an
got here.
additional $6,000 deduction for seniors. Car loan interest. What? Now, this is going to be a deduction. It'll be up to $10,000 and it'll be on American vehicles. The SALT. What is SALT? State and local taxes. What's that? Real estate taxes, state taxes, income taxes at the state level. It's been limited to 10,000. They've landed at 40,000. Now, for states that have the pass through entity tax play, if you will, well, the House said nope, but the Senate said yes. And what's going into play is yes, it will be allowed. That workaround, 100% bonus depreciation.
Yeah, so those are huge, just for real estate investors, but in general, for those that are of, high net worth individuals that won the additional senior discount. That's good. Once you get to a certain age, you can clock that one in. Car loan interest deduction if you buy American, up to $10,000. That's a bonus. That one goes to everybody. If you're spending $10,000 in interest, as American made car, you can get that right off up to 10%, 10,000. I'm sorry. Salt, that is a huge one, especially if you're in a high state tax environment like California, New York, New Jersey, some of those areas. But even when you start looking at the interest that you pay for other things like property taxes, and if you're not taking the standard deduction and you're doing itemized deductions, like as you're going through, like these things can add up and affect the bottom line. And so that's the big thing. If when you start looking at, like, if you don't own your house, then you're not writing off your mortgage interest. You're not writing off your property taxes and other taxes. I know in Virginia we have personal property tax, things like that. where you're able to go through, itemize, and reduce all these things. So that's good overall. I think for people that own, if you have ownership, you're paying a lot in taxes, then that means you have some assets, you have high income. And so this is who this is benefiting, those that are making high income that have issues with taxes and reducing your taxes. It's going to be more money left in your pocket at the end of the day. Let's
Check
see
this
what
one
we got
out. Now
going
it's back to
next.
January 19th of
Oh, this is here,
25,
100%
100%.
bonus
Bonus
depreciation.
depreciation means that for the qualifying assets in your business, bam, 100% deductible if it makes sense for you. Also in depreciation world, section 179.
So we're going to stop on that one. That is the big one for us as real estate investors, without a doubt. 100% bonus depreciation. When you start looking at commercial real estate and being able to depreciate in the very first year all of the assets pertaining to that commercial building that have a depreciation schedule of less than 20 years, you can take all of that depreciation in year one. This is huge because now, take for instance, our first apartment complex that we bought. That purchase price was $1,050,000, and our year one depreciation was 186,000. So the way you go through, you do a cost segregation study. You have engineers, they go through and they itemize all the components of the building. You subtract out the value of the land, and now all of the remaining pieces of the building that's being constructed there, it's going to have a depreciation schedule. So everything that's under 20 years on the depreciation schedule, it's all taken that very first year. So for like on $1 million property, we had about nearly 20% of the purchase price was qualified as the first year depreciation, which is great because especially for those that have, from an IRS perspective, can be deemed a real estate professional. So if you're deemed a real estate professional, you have at least 750 hours each year dedicated to real estate, you or your spouse, then you can bring your passive losses from real estate to wipe out active income. That's a strategy that my wife and I that we've used for years now. Once we started fixing flipping, then eventually getting apartment complexes, then now we can take those losses on the real estate side and apply it to my W-2 income when working full-time active duty Air Force. And so this is a game changer. Of course, this is informational. Make sure you talk to your CPA about your specific tax situation and what works best for you. But 100% bonus depreciation is going to drive a lot of investment back into commercial real estate. This is going to be a big one because there are a lot of times, right now, I think bonus depreciation was down to 60%. It started phasing out 180, 60, 40 over the last few years. I think 2022 was the last year of 100% bonus depreciation. 23 was 80%. And when I look back over the five apartment complexes that we've bought since 2020, that we have over $1 million in passive losses in the very first year of ownership for those complexes when you add it all up together. And that's huge because it puts a lot of money in your pocket that you can reinvest and you can do other things with that you're not having to pay. And so this one here is huge. Being able to have 100% bonus depreciation going forward is going to be a big game changer. It's going to drive my strategy for sure on what we're doing with picking up other apartment complexes and our clients that we're working with on giving them additional strategies on how they can own apartments and now save more money on taxes and put these deals together. So this one is going to be huge. Super excited about the opportunities with this.
That depreciation is allowed 100%. Now, it does get limited to your income. There's some exceptions to all that. You know that, right? But, anyways, up to $2,500,000. The green clean vehicle tax credit. Don't know that you're going to see this as a positive, but it expires on 10/1 of 25, meaning from 10/1/25 and after. If you purchase it, well, from that date and after, you're not going to be able to get that credit. That's that $7,500 credit. No changes, little changes, tax rate, standard deduction, other dependent credit, the earned income tax credit, the estate and gift exemption, the mortgage interest is going to be limited still to the 750,000. And when we're talking about the child credit, slight increase for that as well. So as promised in the body of this video, you'll find a link to a summary going through
Yeah, and that pretty much gives us a good rundown. That mortgage interest is another big one. Section 179 depreciation as well too. With diving into the equipment side of things, I think really the mortgage interest up to 750K that you can deduct off is huge. Once again, ownership, owning assets, and that's what I love about real estate. That one is the tax benefits. Two, we buy for cash flow. Three, we have the long term appreciation, and then four, I would say five. You got four, it's a great hedge against inflation, which we know we are in an inflationary environment. If you look right now, the last couple months, that the dollar has gone down about 10% in value. Guess what? Inflation. It's going to eventually is pushing assets up. And we know since 2020 that across the board, most real estate prices have appreciated over 40%. And so if you've owned real estate, depending on where you are in the United States, of course, it's local, but there's highly likely that you've increased your net worth 30, 40% easily. And so the number five is, guess what? Each month you're building equity. Your tenants, your residents are paying down your mortgage. And that all feeds you with building wealth day in and day out. And that's what it's all about. That's why I love real estate. And you look at the big beautiful bill and all the inputs that go to that those that own assets that have businesses, you're being set up for success and for future growth. And so that's the thing that we have to focus on. So great video. Love JT the CPA and everything that he puts out, and pretty straightforward. And I'll see you guys on the next video. Make sure you give the thumbs up, subscribe, share in the comments. What's your number one benefit that you see from the big beautiful bill that you're layering into your real estate investing strategy, or just your overall wealth building strategy? I'd love to hear that in the comments. Until then, we'll see you on the next video. Let's go and let's make some equity happen together, guys.